How's it going today, guys? So today we're going to be talking about what are the best stocks for a beginner to invest in. Now, before I get into the video, what's kind of cool is I just got a new tripod. So before, when I was moving around, there'd be a lot of shaking and stuff, but I got a nice heavy duty, it's like a lot heavier, it's a very tall tripod, and I just practiced, like I moved around a ton and it didn't shake at all. So hopefully all that shakiness is gone now. I'm trying to continually upgrade my equipment as I go here. So that should be an improvement. So let me know what you guys think. Hopefully there's no shakiness to the video. But I'm basically going to outline what you should look for as a beginning stock market trader, what the best stocks are for you, and then give you 5 stocks that I might recommend for a beginner. Now, obviously, you have to make your own decisions with investing, so I'm not telling you to go buy these stocks, but these would be 5 stocks that if I was just getting started out and I was looking to invest in some dividend stocks, I would highly consider these 5 right here. But basically, as a beginner, you want a low-risk investment just to get your feet wet. I know a lot of people have the enticement of the penny stocks and stuff like that, and they say, oh, but they're so cheap, I'm getting many more shares for my money, but it just doesn't work that way, guys. You can invest in whatever you want to. I mean, that's the beauty of trading. You can go buy whatever you want, but I would much rather see somebody invest in a dividend stock and over a couple of years have a nice return and they have a positive experience with investing than to see someone invest in a penny stock and lose their shirt and then say investing is a losing game and never investing stocks again. So I would rather see someone invest in one of these blue chip stocks, basically. And I'm going to explain what that is. This is a very basic video, so to some this may be like no-brainer, but just to cover all the bases in case this is a complete beginner watching this video. But the best option is usually a blue chip stock that pays a dividend. So what is a dividend? A dividend is a sum of money paid quarterly to shareholders. It's a method of profit sharing, so if that company is turning a profit, you get a percentage of their earnings in the form of a dividend. And then a blue chip, this refers to a large, well-established, and financially stable company. It's actually named after the blue chip in poker being the most valuable chip. And these are the market leaders or the household names. So the big companies that you hear about, for example, Apple's on this list. Apple's a big one. Coca-Cola, those are like the blue chip stocks. Blue chip stocks are typically slower moving than growth stocks, but the idea with this is there's a lot less risk. So for a beginner, these are perfect. Dividends are paid to reward investors and to keep them around. So since these stocks don't generally have explosive moves where they go up crazy in value, the dividends are nice because it's a nice little cash payment each quarter that kind of keeps the investors happy and it keeps them sticking around and leaving their money invested in that stock. Now, what's interesting too is that investors often flee to blue chips in times of uncertainty due to the stability of these stocks. And before I get into the first 2 stocks, I have a little sheet or a little note here of stocks to avoid. And this is just based on my own personal experience and people I've talked to, so if you disagree with me, that's totally fine. But I say as a beginner, you want to avoid penny stocks or any stocks with a market cap, which is market capitalization. That's basically the market value of the stock. It's very easy to find that number. Any stocks with a market cap under $2 billion, any biotech or pharmaceutical companies, any mining or exploration companies, as well as any company that's not turning a profit. And one of the easiest ways to see if a company is turning a profit is to look at the PE or price to earnings ratio. If it is negative or it says like NA or it's not there, it's because they're not turning a profit. You want to find a stock with a positive PE ratio. But if you want to learn more about PE ratios, I have a whole video talking about that. I'll probably link it up at the end so you guys can get an idea of what I'm talking about with that. Okay, so the first stock on my list here is Waste Management. They trade on the New York Stock Exchange under the symbol WM. They have a market cap of $31.7 billion. They currently pay a 2.36% dividend, and their price to earnings ratio is 27.19. So everyday essentials and utilities are typically great investments. And Waste Management is a trash and refuse company. They are the largest in the US. They have a network of landfills, disposal, and recycling centers. Now, I think we can all agree that waste collection is essential to our everyday lives. I'm sure if you guys have ever missed the trash can where you forgot to put it out and you had to double up one week, you realize how much trash you really produce when you have all those bags sitting there. So imagine if that just went away. So obviously this is not a business that's disappearing anytime soon, and it's not really a business that changes. Other than, they may be adapting and, improving their fleet. But as far as the way we use it, we just bag our trash up, throw it in the bins, put our recycling out there. There's not much that's going to change with that. And I don't see us producing any less waste in the future, especially as, there's more people moving to this area and just more people in general. There's going to be more trash. So it's a business that is not changing, it's very stable. Waste management has a very low risk of disruption, and that's for two reasons. Number one, very capital intensive fleet. So it's incredibly expensive to get all of those trucks and buy those trucks in order to do this business. And number two, it's a heavily regulated industry because there isn't a lot of competition. There's a lot of regulation involved with the waste removal business, and waste management is heavily regulated in doing that. Now, waste management as a regulated business simply passes along rising costs to the customers. So they can pretty much guarantee that they're always going to make a healthy profit. And they have a huge competitive advantage due to this low risk of disruption. They also have had stable growth over time and a history of rising dividends. Now what's crazy to me, and I know this, it's just crazy to me that in the last 12 months, this stock is actually up 26%. And over the last 5 years, this stock's up 100%. It just blows my mind that you could have invested 5 years ago in something as simple as a waste management service that's so essential to our lives and doubled your money in 5 years. So that's a really good track record for this stock, and over the last 5 years, that's an incredible return. I'm sure any of us would be happy with a 100% return over the last 5 years. Okay, so the second stock is Microsoft, another one that everyone's heard of. They trade on the NASDAQ exchange under the symbol MSFT. Much larger market cap. Theirs is at $502.1 billion. They pay a 2.39% dividend, and their price to earnings ratio is at 30.73. Microsoft has been turning a profit and rewarding shareholders for decades. They dominate the software industry with the Windows operating system as well as the Office suite. If you guys haven't heard of either of those two, you've probably been living under a rock or never used a computer in your life, because they're pretty much essential to day-to-day operations in every single office in the world for the most part, unless you're using the Macs or whatever, any other operating systems. But for the most part, Windows is very essential to our daily lives. And then there was a lot of concern with this company as far as how they were going to keep up with the future and the trends and everything moving towards the cloud storage. But they released Office 365 as well as a couple of other cloud-based softwares. They have their CRM, which is big for, I think that's for businesses trying to keep track of leads. They now have a cloud-based CRM. But they also have Office 365 and a couple other cloud-based software programs. Their other product lines include Xbox, another big name, Bing, the search engine, as well as the Surface. They make the Surface tablets, and just basically like a handheld tablet with a keyboard that flips out, kind of like the next generation of the laptops, what they're trying to be. They recently acquired LinkedIn, which is a very logical play for Microsoft, and over the last 12 months, the stock is up 16%. And again, over the last 5 years, they're up 102%. So there, right there, is two stocks you could have invested in 5 years ago and doubled your money. That's pretty cool. Okay, so the third stock is American Express. They trade on the New York Stock Exchange under the symbol AXP. They have a market cap of $67.37 billion, a 1.69% dividend yield, so lower than the other ones that we've talked about. But their price to earnings ratio is currently at 13.44, which we're going to talk about in a second. That's actually incredibly low. So in 2017, although this 1.69% dividend seems like a paltry amount, in 2017, American Express will pay Berkshire Hathaway close to $200 million in dividends due to the size of their position in American Express. Now, American Express provides charge and credit card payment products, as well as travel-related products to customers and businesses, consumers and businesses worldwide. I think we can all agree the payment services provided by American Express are essential to our lives. I personally don't have an American Express card, but I know a lot of people who do. And if you have an American Express card, did you use it today? Because if so, that just proves how essential these services are to us. So this is a service that, again, isn't going to be going anywhere. Now, like I said, their current price to earnings ratio is low. Now, what that price to earnings ratio basically means is that $13.44 invested would yield you $1 in company earnings. It's basically a comparison of the price of the stock or the share price compared to the earnings that stock gets. So basically, if you invest $13.44, you should get about $1 worth of company earnings. However, when we look at Visa, theirs is 42, MasterCard is at 30, and PayPal is at 37. So when a stock has a low price to earnings ratio compared to the PE ratio of stocks of the same sector or industry, that's a good way to decide whether that stock is a value or if it is overpriced. So based on comparing it to their main competitors, it appears to be a good value right now with a price to earnings ratio that is less than half of any of their competitors right now. Over the last 12 months, they're up 21%, and over the last 5 years, they're up 32%. So not as much as the other ones we talked about before, but still, over the last 12 months, that's a nice little return right there. Number 4, another one that you've probably heard of, but you never really thought of it, that's Cisco Systems. They trade on the NASDAQ exchange under the symbol CSCO. They have a market cap of $162.08 billion. They currently pay a 3.56% dividend, which is a fabulous dividend compared to these other ones here. Anytime you see a dividend in the 4 to 6% range, that's a very good dividend for a stock to be paying. And they currently have a price to earnings ratio of 16.76. I can't speak to whether that is low or not, because I have to compare it to other companies in that industry, and I didn't really do that. But you could do some research yourself, and I'm not really even sure who the competitors are for Cisco, but if you guys wanted to look into that, just compare it to their competitors and see if that's a high PE ratio, if it makes sense, or if it is a low PE ratio. But Cisco is the networking giant responsible for the equipment that facilitates our financial transactions and file sharing over the internet. The high dividend yield makes them an attractive investment, and they have paid their first dividends in 2011, and they have been increasing dividends since then. So they don't have as great of a dividend history as some of these other stocks, but they have a nice hefty dividend at 3.56%. Now what's interesting is that analysts expect Cisco to grow earnings by 11% per year, and the 11% per year over the next 5 years, and the dividends should follow earnings as they're a representation of the company's earnings. You know, they're paying you back for investing in them. And over the last 12 months, that stock is up 16%. Not as much as the other ones here, but over the last 5 years, they're up 64%. So that also wouldn't have been a bad investment 5 years ago. And then the final stock, again, this is one that everyone has heard of, and I've talked about it numerous times on this channel. That is Apple stock. They trade on the NASDAQ exchange under the symbol AAPL. They have a market cap of an astounding $737.62 billion. Currently pay a dividend of 1.61%, and their price to earnings ratio is a 16.92. Apple has been a great long-term investment for many, and they need no introduction. I don't have to sit here and explain to you what Apple does for us. The majority of us are probably viewing this video on an Apple device right now, or there's one in your pocket if you're on your computer. Or maybe it's sitting on your desk, but they're an essential part of our lives. Apple products have undoubtedly become an essential part of our everyday lives. Where would many of us be without our iPhones right now? We would be absolutely stranded. They have been one of the hottest stocks of 2017 after they posted record high earnings, and they are the most valuable public company in the world based on market cap. So over the last 12 months, they're up an astounding 32%, and over the last 5 years, they're up 72%. But anyways, guys, those are 5 stocks that I might recommend to beginners. If you guys enjoyed this video or you have any feedback, please drop me a comment below. And if you guys are looking to learn more about trading in the stock market, I do have my beginner's guide to stock market trading, which I will link up in the description, and there should be something popping up on the screen here as well. But if you guys enjoyed this video, please drop a like. And if you're new to the channel, please consider subscribing to be notified of any future uploads. And as always, I thank you guys for watching this video.